President Biden signing a short-term funding extension just a few hours ago, averting a partial government shutdown. But the next deadline is just about 6 weeks away on March 1st. So now what? Joining us is Ed Mills, Washington policy analyst, managing director at Raymond James. Ed, good to see you. So there's also this tax deal that needs to get done, and a question of how much goes toward the child tax credit, how much goes toward business. How important is this for the economy?
John, I think this is a nice, pleasant surprise. So this tax package is over $70 billion. It's for 3 years, but retroactive to last year. If this gets done, that's about a $10 billion a year additional child tax credit and an additional $10 billion a year tax benefit for corporations that have big research and development expenses. They didn't think they were going to be able to write off as much as they would come April 15th. And for these households, especially households below $40,000, and about half of the households in this country below $20,000 of annual income, between now and April 15th, if this passes, are going to get about $10 billion deposited into their checking account, which I think will help fuel the economy and add to the soft landing conversation.
Perhaps we shouldn't be surprised that during a major election year, politicians can at least agree on handing out money ahead of people going to the polls. But what about kicking the can down the road over and over again on this budget? Now we've got the March 1st deadline looming. The market's ignoring it, clearly. We've got record highs on multiple averages right now. But is there risk here?
There's always risk, John, but I would always highlight what we've told our clients here at Raymond James is that when the government shuts down, the market goes up. On average, we've seen an up of 3.2% in the S&P 500 during government shutdowns. So that's part of the reason why we ignore this. Now, the next 6 weeks, lots of negotiations. They're going to see if they're able to get a defense supplemental, a deal on the border. The House Republicans right now are not really on board with that. Speaker Johnson would be former Speaker Johnson if he were to bring that to the floor. But the top line numbers that are being discussed, it's flat on consumer discretionary. It is a 3% or about $30 billion increase on defense. So there was a lot of concern coming into this new Congress that there would be a fiscal drag. And actually, the spigot in D.C. remains on. Lots of hidden stimulus in the background that I'm happy to talk about as well.
Yeah, I do want to get into that hidden stimulus in the background. But first, just one more question, because you did touch on defense and the supplemental, which obviously big question mark. We talk about R&D amortization and changes there. That's actually be beneficial to defense contractors, some of the biggest spenders in terms of research and development. But to your point, when you start operating on continuing resolutions that are now extending into March and you have question marks about a defense supplemental, it can't be good for that particular sector. Even if stocks more broadly go up when you see a potential shutdown, that particular sector, I would imagine, is going to continue to take it on the chin here, at least in the near term.
You're right, Morgan. And I think when we saw a big push going into the end of the fiscal year, which was September 30th, a big push into the end of the calendar last year to get this defense supplemental, the war between Israel and Hamas, it seemed like this was a done deal. However, the longer this has gone on, the more problems that have come up, especially now on the border deal. We are talking about a national security package more so than a defense supplemental. Getting some of the policy issues fleshed out on the border are very difficult. Now, the defense bill might get a vote in the Senate next week. What I've been telling investors at Raymond James is that if this gets above 75 votes in the Senate, that might be enough momentum that forces a vote in the House. But short of that, that's a really tough hill to climb in the House. And sometimes on issues like the border, you see former President Trump highlighting this. Sometimes it's better to keep the issue than actually get a solution from a political perspective. But unfortunately, that has a market consequence.
Now, we just talked about the child tax credit, but you did tease the fact that there's other hidden stimulus afoot. Like what?
So I think you kind of have to highlight the fact that in the last 2 years, we've passed a lot of bills like the bipartisan infrastructure bill, the CHIPS and Science Act, the Inflation Reduction Act. It might seem like old news for the market, but say on the CHIPS and Science Act, there's $54 billion worth of grants that are about to go out. As of right now, less than $200 million has gone out the door. Almost none of the bipartisan infrastructure money has actually been spent. We've announced it. We're going to start spending it this year. Tax policy has been set on the Inflation Reduction Act. Look for CapEx expense to ramp up this year. That all kind of helps out in the background, especially if we see a weakening in the economy. That fiscal support starts coming in an election year.